Today, we're going to answer the question that as real estate professionals, we get asked the most often. How's the market? As you analyze the real estate market, you can do it on a week by week, a month by month, quarter by quarter, or year by year basis. I've found the best way to analyze the market in an up-to-date fashion is quarter by quarter. And the reason is because a real estate transaction typically takes a month to a month and a half to close. So when you look at a quarter, you're going to see a segment of closings that gives you enough depth into the market to really understand how is the market adjusting on a basis that's long enough to get real data. We're going to dive into this. Starting off, we look at market share. We look at what companies are currently dominating the market. Well, Keller Williams here at 18% of the market is as much of the market share as the next 4 companies combined. And that's the total for sell and list sides. So agents representing buyers and agents representing sellers. The next thing we look at is we look at supply and demand. It's important to understand supply and demand as you look at how the market is performing and also to break that down by price point because different price points are behaving differently. When you look at this, know that 6 to 7 months, that's represented in the yellow here, 6 to 7 months of supply is balance between buyers and sellers. Here's what that means. If no new listings hit the market in that price range, how long would it take for the number of buyers that are purchasing on a monthly basis to buy all the properties that are available in the inventory? So again, no new inventory hits the market in that price point. How many months would it take for the current buyers that are buying on a monthly basis to go through all the inventory that's available? 6 to 7 months is balance. If you have less than 6 months of supply, then that means there's not enough supply to be balanced because the demand is too high and there's not enough supply to meet that demand. That creates what's called a seller's market. So less than 6 months of supply and the seller has the advantage. When you have more than 7 months of supply, then that means that the buyer has the advantage because there's more supply than it would take for 7 months of the buyers to go through the amount of supply that's in the market. So this means it's an oversupplied market, and in that market, the buyer has the advantage. So as you look at and you analyze per price point, you see under 100,000, that's a little bit of an aberration just because there's a lot of properties that are priced incorrectly in that price range. Looking between 1 and 200, you see that we've gone up from third quarter of last year to the end of third quarter this year, and it's almost doubled the amount of supply that's in that market of 100 to 200, 200 to 300, again, over a 50% increase, 300 to 500, about a 40% increase, 500 to 750, again about a 40% increase, 750 to 999, so 750 to a million, call it. You're looking at about a 20% increase, a million to 1.5. You've got an increase of about 20%, and then 1.5 plus. Now over 1.5 million, where last year at this same time, it was balanced in that 6.5 month range. Now it's actually moved into a market where the buyer has the advantage on price points of homes that are over 1.5 million. In the third quarter of 2024, there was 10,000 closings. Out of those 10,000 closings, about 56%, so you come over here, you see 56% of those homes did not have to have a price reduction in order to sell. Those homes that were priced correctly for the condition that they're in sold at 100% sales price to list price on average. What that means is some of them sold for over list price and some of them maybe sold a little bit under. And that's in 11 days on market average. Now, some of those homes had previously been listed and then didn't sell. So those are here under previously listed. So there was no price reduction in the new listing period. However, they had been on the market before and they had been previously listed. Those were selling at just a little bit off 100% at 99.6 and 108 days on the market. Now, If it had not been previously listed, first time the property was on the market and it was priced correctly, it's selling at 100% sales price to list price in an average of 10 days on the market. If it was not previously listed, it's about 6% off of list price in 44 days. However, if it had been previously listed and it didn't sell, it comes back to the market and it had to be price reduced in that second listing period or third listing period, we're talking almost 10% off of list price and 120 days, which is almost 4 months. Well, it's exactly 4 months in order for that property to sell. So just know, as you look at this data and information, this is the properties that closed. Did the price have to be reduced or was it priced correctly? This for buyers, for sellers, and for all the agents, price the property correctly the first time. Now, there's another category that we didn't talk about in the previous slide because all we were talking about there is the homes that actually sold. There's another category, the homes that didn't sell. Those have been increasing as a percentage of the market every single quarter for the last year and has reached a point now where 37% of the homes that are listed on the market fail to sell. This doesn't mean that they drop their price. This means they don't sell at all. And you can see based off of price point that the two bookends under 100 and over 1.5, you can see that those are higher. Then you've got more moderate in the middle, but even still, you're talking about over 30%, over 35% in every one of these categories. That means 1 out of every 3 or 4 homes that is listed on the market fails to sell. And what that does, when you put all that together with the homes that closed, for every 100 listings that hits the market, 62 of them sell and 38 fail to sell. Let that process for a minute. 38% of the homes that are listed in the market, that's almost 40%, fail to sell. So as you come down here to the bottom and we put it all together, there are 35 out of 100 that are priced correctly, no price reduction, and they sell. And those are 11 days on market and 100% sales price to list price. 27 price reduction and 38 that fail to sell. The reason you see the 38 and the 27 added up down here is because 65 out of every 100 homes that hit the market currently are overpriced so much that they either have to drop their price on average 7% or they fail to sell. So the moral of this story for everyone involved, if you're looking to sell a home, price it correctly. If you're an agent who's listing a home, price it correctly. If you're a buyer who's in the market today, know that once a home goes over about 11 or 12 days, there's a strong possibility that it is overpriced and you as a buyer could negotiate potentially 7 to maybe even 10% off of that price. Looking at this just gives you, it's built like a baseball chart. And the reason it is because you've got the outfield, right? And this is the homes that are priced so far into the outfield that they don't sell. That's 38% of the market. This 27%, we're coming more to the infield here, right? This is rounding the bases. 27% will still sell. However, they have to drop their price. And remember, they're dropping their price on average over 7% and 68 days on the market. And then you have what we call in the market. These are priced correctly from the start. That's 35% of the market. And they're selling at 100% list price to sales price on average at 11 days on the market. This is the market that we are in right now in the fourth quarter of 2024. It's important that as buyers, sellers, and as real estate professionals, we understand this market so that we know how to advise our clients, and if you are a client, so that you're educated as to the market that you are buying or selling a home in. Crush it, we're stronger together.